Welcome to the Delivery Hero Taiwan Divestment Conference Call. Today's presentation will be followed by a Q&A session. For those of you who have joined via the Zoom webinar, you can use the raise hand function at the bottom of your Zoom screen at any time to join the queue to ask a question, and you will be called upon during the Q&A session. If you have dialed in, please press star 9 to enter the queue. If you want to withdraw your question, please lower your hand using the raise hand function in the Zoom app, or via telephone press star 9. I will now hand the call over to Andrea Ferraz Estrada to begin the presentation.
Hello and welcome everyone. Thank you for joining us on short notice for this update regarding the significant milestone in Delivery Hero's ongoing strategic review. Joining me today are Niklas Östberg, CEO, and Marianne Popp, CFO at Delivery Hero. Following a brief presentation, we will open the floor for Q&A. Please note that we will be publishing our full year results on Thursday, and we will be hosting an analyst call on the day. We will therefore not be commenting on business performance or provide 2026 guidance for the Delivery Hero Group today. I will now turn the call over to Niklas. Please go ahead.
Thank you, Andrea, and thank you all for joining us today. We are pleased to announce the divestment of our food delivery operations in Taiwan to Grab for $600 million in cash. This marks a decisive first step in the strategic review we announced back in mid-December 2025. While our operational performance remains strong, we recognize that public markets have not fully reflected the intrinsic value of our global operations. This is our fifth asset monetization to date, and it allows us to crystallize fundamental value for a market-leading asset. Executing a successful carve-out like this is no easy feat, and I'd like to thank the team for many long nights over the past 9 months. The negotiations had many ups and downs, but the outcome is good for both Grab and Delivery Hero. Let me now hand over to Marianne to brief us on the transaction details.
Thanks, Niklas. Let's look at what it means for our financials, balance sheet, and capital structure. In full year 2025, the Taiwan business generated a GMV of 1.5 billion euros, representing around 3% of the group's total GMV. This move significantly strengthens our capital structure, reducing our net leverage from approximately 2.7 times to 2.2 times. We anticipate the transaction will close in the second half of 2026, subject to the usual regulatory approvals. To ensure a seamless decoupling from our global infrastructure, Delivery Hero will provide support services for a migration period of up to 12 months following the close. While Taiwan is a decisive first step, it is just one of several ongoing reviews. To protect the integrity of these processes, we will not provide interim updates. We will inform the market only when definitive agreements are signed. And with that, we can move on to questions. Operator, please go ahead.
Thank you. Ladies and gentlemen, we will now begin the Q&A session. For those of you who have joined the Zoom webinar, if you have a question, we ask that you please use the raise hand function at the bottom of your Zoom screen. Once called upon, please unmute your audio and ask your question. If you have dialed in, please press star 9 to enter the queue and star 6 to unmute once called upon. Our first question comes from Joe Barnet-Lamb from UBS. Please unmute your line and ask your question.
Excellent. Thank you very much for taking my question. I'll open with one and get back into the queue. But yeah, I just wanted to start with regard to your balance sheet. You obviously announced the issuance of a term loan a week or so back. There's been substantial debate in the market as to why you felt the need to issue $1.4 billion, $600 million or so more than the converts you explicitly stated you would buy back. The company line seemed to be sort of prudent balance sheet management, but I think many investors struggled to get their heads around that. And obviously that debate is only going to be exacerbated with an additional $600 million eventually coming from this sale. So can you give us a bit of an explanation for sort of the size of the term loan issuance and maybe more broadly why you feel the need to sit on such a substantial cash balance? Thank you very much.
Sure. So yes, we have obviously raised a term loan a week ago. We're now expecting $600 million from this transaction. And I think the the explanation for that would be, similar and in line with what we said previously, to focus on repaying existing debt, and overall, strengthening our capital structure. And with that, with those amounts in our balance sheet, we deem that we can remain flexible, we can remain well prepared to respond to future opportunities or challenges. And this supports the long-term interests of the company and the stakeholders. So I would say this is very much in line with what we communicated previously, to overall, optimize our debt structure, reduce it, and strengthen the capital structure.
Thank you. Our next question comes from Monique Pollard from Citi. If you'd like to unmute your line and ask your question.
Oh, hi. Can you hear me?
Yes.
Hi. I just had one question, if I can. It was just around the profitability of that Taiwanese business and how we should think about the business going forward without it in. So I understand it's positive EBITDA before central costs. So should we think that the sort of net EBITDA impact is immaterial for losing that business? And are there any fees that you will get for the 12 months in which you help with the kind of service agreement of the asset? Thank you.
Yes. So if we think about 2026, we indeed expect the impact to be marginal. So as mentioned, on a country level, Taiwan contributes to adjusted EBITDA. And when you include the platform cost allocation, the impact is marginal. So that's the way to think about 2026. And then, as mentioned, we expect to continue to provide Taiwan with technology for 2026 and the most part of 2027. And that would follow a normal approach to transitional services. And again, that would mean that the impact on the EBITDA and cash flow would be marginal for those years or for the period where we provide those transitional services. And I think if you think beyond that, that's obviously then quite a while. We would expect to have managed to adjust the cost level to the size of the business at that point in time. So again, I think about it as a marginal effect.
Thank you. Very clear.
Thank you. Our next question is from Luke Holbrook from Morgan Stanley. Please unmute your line and ask your question.
Yeah, good afternoon, everyone. Thanks for taking my question, and congrats on getting the deal announced. Mine is just on how you're thinking about the multiple and the value that Grab has paid compared to what Uber was effectively announced to be paying 18 months or so ago. Just trying to get your thinking on how that's changed and the multiple for this deal size. Thank you.
Do you want to take this, Nicholas, or shall I go ahead?
Sorry, I was on mute. I'm happy to take it. So repeat my answer. So every deal has certain uniqueness in it. And of course, the market is also different we now versus back then. But I think the biggest difference we have here is that Uber was and still is operating in the market. So for them, this would have been incremental gross profit contribution and so on. So therefore, of course, more value in that in-market consolidation than someone now entering the market. If you look at someone entering market, you have to look at the value of that business as a standalone, so versus integrate into an existing business. We think, given the market environment and both multiple contractions and war and other things going on, I think we managed to agree on a good deal that is good both for Grab, and it leaves them a lot of upside going forward, but also a good deal for us. That is significantly incremental to at least the way delivery is valued today. So I think we can both be very happy with the outcome of the deal.
Thanks, Nicholas.
Thanks.
Thank you. As a reminder, if you would like to ask a question, please use the raise hand feature. If you have dialed in, please press star 9. Once you've been invited to ask your question, please unmute and ask your question. Our next question comes from Joe Barnet-Lamb from UBS. If you'd like to unmute your line and ask your question.
Excellent. Thank you for allowing me back in. Just so you referenced that Taiwan's small adjusted EBITDA positive pre-central cost allocation, and you gave some color on total adjusted EBITDA in answer to Monique's question. But my understanding is there's a major tech hub in Singapore, and obviously the businesses of that serve is sort of somewhat dwindling. So I guess the premise of my question is there a degree to which the sale of Taiwan potentially unlocks sort of a larger evolution in central costs and tech costs over time? If you give a little bit more color on the evolution of central costs would be great. Thank you.
Yeah. I mean, I think as mentioned, right, for the transition period, that technology and product support will still be existing and be provided to the Taiwan hub, right? So I think that very much continues the ongoing support to the hub that we have right now. I think over time, there will definitely be a process of adjusting the operations of that hub, right? But I think again, for now, we have to reach the closing point of the transaction, and then we have to move into the post-closing migration period, which is designed to last up to 12 months. So I think it is definitely a topic to obviously size the activities and operations of our tech hubs to the businesses they serve, but it's also an ongoing process as we still will have to continue to support that business for quite a while.
Thank you. Our next question is from Silvia Cuneo from Deutsche Bank. Please unmute your line and ask your question.
Thanks. Good afternoon, everyone. Just wanted to ask a question if you could tell us a little bit more about your market position in Taiwan versus competitors right now, just as a way to get a little bit of extra background, as that would be helpful to understand the context for valuation of assets in the current market and the potential for the remaining portfolio. So yes, like what can you tell us about your Taiwan position?
And I think we have a very strong position in the Taiwan market. The business has been operating very well. And over the last couple of years, we have also significantly improved our profitability in the market. We believe to have a very strong position in the market. There are some geographical differences. I know with our main competitor, Uber, there will be some areas where they will be slightly larger, and there will be some areas where we will be larger. But I think overall, I think we have a very strong position.
This concludes the Q&A session. I will now hand back to Niklas Östberg for closing remarks.
Yeah, well, thank everyone for listening in. And thank you also for everyone who's been working hard on this. It's a first good step. Then also a big thanks to the Taiwan team for having built a tremendous business. And I believe there is a very exciting future ahead of you. I think Grab is an excellent owner. And thank you very much, everyone.